Hello and welcome to this Crescent International webinar looking at the impact of COVID-19 on financial reporting and auditing. It is clear that COVID-19 will have an impact on a wide range of entities, and how it impacts individual entities will vary depending on the nature of their business and the financial position that they are currently in. The first point to remember is that companies are responsible for their financial reporting, and they will need to consider how it impacts on any financial statements they are currently preparing, both in terms of the values reported in those financial statements and the relevant disclosures. And these too will vary depending on the nature of the client and their reporting framework. Please remember that if you're assisting the client with their financial reporting responsibilities, this is a non-assurance service, and you will need to ensure that appropriate safeguards are in place if you're providing significant assistance regarding the preparation of amounts to be disclosed in the accounts, as well as the notes to support the disclosure in the accounts. So please make sure that the independence rules continue to be followed in respect of any of those services that may be provided to clients. Obviously, as the client adjusts their accounts or changes their financial reporting, the auditor will have responsibilities around the disclosures and the adjustments in the accounts, and that may impact on the audit work that is undertaken and how that is performed. And obviously, the auditor may have challenges around access to evidence if they're unable to access the client's premises and documentation, and undertaking certain audit procedures. And we will look at some of these during the course of this webinar. So what am I going to look at today? I'm going to highlight some of the common financial reporting issues that have been identified, look at some of the common audit concerns, and then provide you with some further sources of information and guidance that may be of assistance as you look to deal with this challenging time. So from a financial reporting issue perspective, what are the questions that the company needs to think about? Well, the first thing is, what is material to the financial statements? It's important to remember that materiality has both a qualitative and quantitative aspect. And many users of the accounts, investors in the accounts, will actually be as interested, if not more interested, in the qualitative impact of COVID-19 rather than just the quantitative adjustments to the accounts. So the disclosures of the business around the risks and the impact are very important in these circumstances. But as I say, this will vary from company to company, and their first decision is to identify what is material in their context. The company will need to consider the reporting date and the impact on reported amounts. The question is really around whether the COVID-19 pandemic is an adjusting or non-adjusting post-balance sheet event, and that may depend on the company's year end. So for example, in many cases, the 31st of December 2019 year end, many of the events will be non-adjusting as they've arisen after the balance sheet date. So therefore disclosure will be required. If you have accounting periods ending, for example, on the 31st of January or 28th of February, the decision may be more difficult to make. It may depend on how events have unfolded in your individual territory. And by 31st of March year ends, which is another common year end, it is likely that in most cases the events potentially are adjusting, and more evidence will become available of the impact after the 31st of March, but the adjusting event has happened before the year end. However, these are not always easy decisions, and therefore reference must be made to the relevant financial reporting framework, and consultation should be undertaken as appropriate. And also, as I say, remember this is the company's responsibility to prepare their financial statements. Obviously, you need to make sure the relevant disclosures are made in the financial statements, especially around accounting estimates and other items that have been impacted by COVID-19. A key area which many companies will be concerned about will be going concern. And is that still appropriately disclosed? Do they need to change the disclosures? And in certain cases, there may be a question as to whether the going concern basis is still appropriate. And again, this is something that the company will need to consider carefully and may want to consult with you as the auditor on. And then obviously they will need to make sure that other information that surrounds the financial statements, where that is prepared, is consistent with the financial statements themselves and appropriate in the circumstances. Another key area where companies may find challenges is around consolidations and information from components. Will they be able to get the required information at the required time to meet the deadlines that they may have? Will they be able to access additional information or reports to verify the information that's being included in the consolidated accounts? And what is the impact that that has then on their consolidated accounts? And following that, as the auditor, will it have impacts on how you approach the group audit and potentially the audit report? So see, there can be in certain cases a significant number of issues that will arise from the financial reporting impacts of COVID-19. Moving on to the auditor's considerations, the first point of call is management's assessment on the financial reporting impact appropriate? Have they reviewed all the valuations and other assets and liabilities in their financial statements and made adjustments as appropriate? Have they made the appropriate disclosures within the financial statements? And is their assessment consistent with the financial reporting framework in which they operate? As auditors, it's important to remember that the audit is a dynamic, ongoing process. It's not a matter of setting your risk assessment at the start of the audit and then following that through. Risk assessments need to be reviewed as further information comes to light, and therefore the impact of COVID-19 is likely, in all cases where the audit report has not yet been signed, lead to a need to review that risk assessment and potentially amend the approach. At this stage, you may also want to start considering the possible impact on the audit report. That may be around the ability to get assurance on certain assertions regarding certain elements of the balance sheet, or the disclosures in the audit report around a going concern. And again, it's important to start those conversations with the client and those charged with governance as early as possible in the process so that the impact can be considered and assessed. I mentioned when talking about the company's considerations, the assessment of the post-balance sheet events, and again from the auditor's perspective, you will need to satisfy yourself by reference to the accounting framework that post-balance sheet events have been handled appropriately by the company. And again, this may vary on a jurisdiction by jurisdiction basis. Obviously, COVID-19 for many entities will have significant impacts around their cash flows and their ability to potentially continue as a going concern. And therefore it's important as the auditor that you perform appropriate procedures. Again, it's important to remember that going concern assertion is a responsibility of management of the company. And again, you may need the company to prepare new cash flow forecasts or adjust the existing forecasts. And in certain cases, firms will want to delay, and maybe the company will want to delay publication of their financial statements to enable them to have greater time to consider the impact on their business of COVID-19, to obtain greater clarity on the impact of support arrangements that are being put in place by many governments globally, so that they can give a better picture to their investors. Obviously, if the reporting date is delayed from where it was anticipated to be, this may extend the going concern period that as auditors you need to be concerned with and where you need to be performing your work. So again, the company may need to extend that period and carry out additional work, as well as you as the auditor therefore performing additional work, and there will be a commercial issue around this regarding additional fees potentially. But the important thing to remember is that the commercial considerations should not overrule the quality requirements of the auditing standards, and therefore it is important to do the right thing for the client and for your audit opinion in the circumstances. This of course will present challenges both for clients and for firms, and there is no easy answer to that question. As I mentioned, auditors also have some responsibility around other information attached to the financial statements to make sure it's consistent and appropriate, and that will require them to communicate with those charged with governance, especially if they feel that that information is not consistent with the picture given by the financial statements. But generally, the key message is to make sure that you are communicating early and frequently with management and those charged with governance so that they can appreciate the challenges that you are facing as the auditor, and hopefully that they can provide assistance in terms of enabling you to access information, reports, individuals that you need to be able to reach a satisfactory audit conclusion. And as I mentioned, quality is key in this area. Although things are under pressure at the moment, teams will be under pressure, it is important to ensure that quality is maintained, as these financial statements will be issued at some stage and people will look to make decisions based on them, and it's important that we as auditors uphold the highest quality to protect both ourselves and our clients going into the future. What about government assistance? There are many governments that are putting in place programs to assist businesses, support with paying wages, delays or changes in the payment of taxes, other assistance in the form of grants designed to protect employment and ensure that businesses are able to weather this storm. Now, these may assist in going concern considerations, and it can be complex to identify what businesses are entitled to access and actually whether they will be able to access the support that is on offer. Some of the programs come with complicated requirements, and the business may not always be in a position to access them fully. So it's important as auditors that as part of our consideration, we do think about the nature of support and whether or not the entity qualifies and how that impacts on issues such as our going concern consideration. And I've mentioned quality management a couple of times throughout this webinar, and I just want to re-emphasize that maintaining quality is important. Entities, of course, are under a lot of pressure. Cash flow may be under threat. They have suppliers that are pushing them for payment, but customers that are not able to pay them. They have employees that are possibly self-isolating or ill and therefore unable to work. So there is a lot of pressure around the normal day-to-day finance issues. Audit partners and teams are under pressure. They're working in a new environment, possibly remotely, without access to the normal supervisory practices where perhaps the audit senior is in the room all the time to answer questions, assist and train more junior staff. How are you managing that as a firm? Are you ensuring that teams are checking in on a regular, probably daily basis to ensure that issues and challenges are identified and dealt with as soon as possible? And obviously audit partners can be under pressure to sign audit reports to enable perhaps clients to access finance. And again, those decisions can be complex in these circumstances. So one thing you could consider are some temporary changes in your quality procedures. For example, should all reports be subject to second partner review before they're signed? Make sure that consultation support is available and being used. on a regular basis. Ensure perhaps that there is a conversation on all audits between audit partners just to check in and make sure that audit partners are happy with how the audits are proceeding and the evidence and the approach that is being taken by their teams. Think about the quality of evidence that is coming from the client. It may not be possible now to physically go and inspect documents. How do you ensure that documents delivered electronically are genuine and reliable as part of your audit evidence? And obviously there will be other challenges around getting sufficient appropriate audit evidence on some of the assertions we look to as part of the audit. And I say, consider timing of reports. Do the reports need to be signed now? Can they be delayed? What's the impact of that delay in terms of the client and your team? I say again, important areas that need to be considered to ensure that quality is managed, which is a fundamental area at the moment, because it's important that audit reports issued are in accordance with the ISAs and that the work has been done to support those reports, and where needed that the audit report is modified to reflect limitations in the scope or issues that have arisen because of the threats of COVID-19 on the client. This page has a variety of sources. IFAC is trying to bring together resources from across professional bodies and firms on a global basis. The website has a knowledge gateway which will take you to a wide range of resources. You can also check the site of your local regulator and professional body, which may have help specific to your jurisdiction. I've listed there one publication from Australia which has been very helpful in terms of bringing together a number of the financial reporting and auditing challenges from COVID-19. And Preston International has also launched a private LinkedIn page where firms are able to post and share resources regarding COVID-19, and where the international office will also be sharing resources that may be of support and interest to you. It's not just audit, but other areas as well, such as the support that is available to firms and businesses in different jurisdictions and in different areas, such as tax. So thank you very much for your attention and listening to this webinar. I hope you found it useful. I'm sure there are questions. If you do have those, I'm happy to try and give some guidance and support, or obviously follow your own internal consultation procedures and discuss with your fellow partners and senior staff. And I wish you all the best, and thank you very much, and goodbye.